Welcome to Cow Talks. I'm Chris Pravat,
Beef Cattle and Forage Commodity Director for the Alabama Farmers Federation.
And I am Marcelo Wallau, Forage Extension Specialist with the University of Florida.
And this is our podcast, where we dive deep into the main topics affecting livestock and forage production in the southeastern United States.
From the mainstream media to new technologies straight from our research stations.
From cattle prices to international trade.
From our pastures and beyond.
Join us on this journey as we tackle the main issues affecting our producers and the sustainability of our production systems.
Hello and welcome to Cow Talks. This is Marcelo Wallau, Forage Extension Specialist at the University of Florida and your host. And today with me, I have Hannah Baker. She's the State Specialized Extension Agent in Beef and Forage Economics at the Range Cattle Research and Education Center in Nona. Hannah has a master's degree from the Oklahoma State University and a BS in agribusiness from ABAC College in Florida. Hannah, welcome to Cow Talks today.
Hi, thanks Marcelo for having me. I'm really glad to be here today.
So Hannah is very special here today because Cow Talks started with her predecessor, Chris Pravat, which is also a good friend of mine and often a co-host in this episode. And I've been trying to get Hannah here for us to have a conversation for quite a while to talk about her program and her mark in the forage and livestock production in Florida. Hannah, tell me a little bit about you or your background so we can start this conversation today.
Like you said, my predecessor was Chris Pravat, and from what I've been told, it's some very big shoes to fill, so really excited to be in this position. A little bit about my background and kind of how I got to this position. I grew up in South Georgia, about 30 minutes north of the Florida line. I didn't grow up on a cattle ranch or in the cattle industry per se, but my dad grew up row cropping in Omega, Georgia, which is about 10-15 minutes from Tifton, where I went to school at ABAC. And so he and his dad farmed, his granddad farmed. So I like to tell people agriculture is in my blood. I've always loved it growing up, even though I didn't grow up necessarily on a farm or a ranch. We always had a backyard garden. We like to call it our little petting zoo of animals. We have a little herd of goats, a pig, dogs, cats, always. So everything about agriculture I've always loved, and it was taught at a young age to appreciate those who grow our food and provide that so that we can have food on our table. So I've always loved everything about it. And then as I got older, I really loved the business side of things and math and problem solving. So I kind of wanted to combine those two things when I started pursuing a degree at college. So I got to ABAC and decided to major in agribusiness. And then as I started taking more elective classes that were geared towards the cattle industry, I really just fell more in love with the cattle industry and tacked on another degree in livestock production just so I could get a more all-around understanding of the cattle industry so I would be better prepared for a career in that industry. And then I was encouraged while at ABAC to obtain my master's degree. So I looked through some programs and the Lord just opened the door up for me to attend Oklahoma State University in Stillwater. Loved everything about Stillwater. I tell people all the time, if my family wasn't 15 hours away from Oklahoma, I probably would have stayed. I love everything about that school. Really learned a lot, got to learn under some of the greatest livestock economists there are in the country, like Dr. Peel, and my advisor, Dr. Hannah Shear. She's fantastic. Still talk to her on a regular basis. So there, my master's degree, or my master's thesis, I focused on rangeland management and just kind of building some economic analyses around different practices and that sort of thing. Because forage management, I really appreciate and think that's really important process in cattle management, just because that's where it all starts. If you're a cattle farmer or cattle rancher, you're a grass farmer first. So I kind of wanted that to be my master's focus. And then while I was there, I got to do a lot of conferences and extension meetings. So that kind of opened the door for extension. And that's kind of how I ended up here today. I really just love what extension is and everything about it. So yeah.
And that is fantastic. Yeah, Oklahoma State is a great university, and ABAC is a fantastic college here too. I really enjoy working with colleagues and students from ABAC. And range management is in my background too. My PhD was actually with the range management on the modeling side, and then I came to the forage world more here in Florida. And we're talking about completely different ranges when you think about
sure.
Oklahoma and Florida, but they're very similar in terms of many of the species and also management practices. So how was the transition and how is the transition to South Florida? Because that's a very peculiar place there, especially in terms of beef cattle production.
Yeah, for sure. It was very different. The transition was very different. And if I'm honest, I was a little nervous just because it took me, I was out there for 2 years and I got acclimated to how they do things out there, and then coming to South Florida was definitely very different. But I wouldn't say the transition was hard just because the producers I met with, the specialists I met with after I was hired on, made it really easy to acclimate to South Florida and kind of learn of the main forages down there. And so it was, I don't want to say easy, but easier than expected for me to transition, take what I learned at Oklahoma and bring it to South Florida.
You have been a fantastic resource already. So we've been with UF since 2023.
Yeah.
And I know you established yourself very well in South Florida, but your responsibilities are statewide, right?
Yes, correct. Yep. I am statewide. Like you said earlier, I'm at the Range Cattle Research and Education Center in Ona. But yes, my position is statewide. So I travel quite a bit to try and reach all the different counties in the state and get to work with all of the different county livestock agents and then as well as specialists.
Nice. And I want to get to talk a little bit more about some of the programs you have running. Specifically, it caught my attention, the PRF trainings that you're offering and talks. I want to learn more about that also because I have personal interest. So tell me a little more about that work and what is out there for both of our faculty and also for the farmers in Florida that are listening.
Yeah, so the PRF insurance, so that's pasture, rangeland, forage insurance, and it's a product out there for anyone that has cattle grazing on their land or is in hay production. And kind of how I got into learning about the product was I was asked to be a part of a grant with UGA Extension as well as Auburn Extension, and the first part of their project was to put on workshops for producers to come and just learn about what the product was, who can enroll, when you should enroll, and kind of things you should be thinking about, and information that you can prepare before you go meet with an insurance agent who's actually going to help you enroll in the product and give you a little bit more information about your specific situation. So, and then the second part of that we're working on right now is developing online resources. So we're going to hopefully do some testimonial videos where we talk to producers who have used the product and give their personal experiences of how they used PRF insurance and why they used it. And so we'll have those online, hopefully. I think summer is our goal, or fall, somewhere in there, but recording will start sometime this spring. And so basically, pasture rangeland forage insurance, PRF, a lot of people have the understanding that it's more of a drought insurance, but you don't really want to think of it that way. It's not really a drought insurance because, as we all know, droughts can be prolonged, but you can get a lot of rain in 1 or 2 days, but then you're still considered in a drought period just because all that rain was in one or 2 days. It was at one point in time. So PRF, it's based on rain indexes that go over 76 years. So I think back to 1948, if I'm doing that math right. And so they take the rainfall from those 76 years and they average it and create indexes. And so based on your grid where you're at, so you have counties and grids, and they're not the same thing. So you can be in your county, but then a county can span across different grids or vice versa, that sort of thing. So based on where you're at in your grid determines what your rainfall index is, and then it's month by month, so January through December. And those indexes are based on that monthly period. So if you get rainfall less than that index, you could... And based on what you picked for your coverage level and your productivity factor, if you fall below what you picked, then you qualify for an indemnity payment. So that's kind of the rough explanation of the product itself. The insurance companies definitely for sure have several different tools that they can use to help you pick those productivity factors and coverage levels to either maximize your payment or if you want to use it as a risk management tool, which is what we teach in the workshops. So in the first part of the workshops, we talked about why I would even need this type of product. Like if it doesn't rain, how is that going to influence my hay production, or how is it going to influence my grazing program? What am I going to have to pay out of pocket to compensate for less rainfall? So we had them kind of figure that up, put some numbers to that, and then we used the PRF insurance tool to kind of see what productivity factors they should pick and coverage levels to cover that risk. So it's mainly a risk management tool, and that's what the workshops and this whole grant was about.
Very interesting. So this is for any type of pasture in range.
Yes. Yeah. If you have cattle grazing on it, or if you just are in hay production, yeah, you can enroll.
This is a federally supported project through private companies. How does the money system work in here?
Yes, the payments are heavily subsidized by USDA or the government, but it's sold through private insurance companies.
Okay,
Yeah.
so anybody interested will need to contact some of the companies that are providing that insurance.
Mm-hmm.
And how can the farmers find those companies?
You can research any local insurance company near you. They're all over the state. So you can just literally Google. I helped someone do that at one of the workshops, actually. He asked where he can find his local insurance agent, and we just got online and Googled, and we were able to find one pretty close to him. Yeah.
And normally, if you go to the local extension agent, normally the agents will have that connection with the companies providing this type of service. Let's say people are interested. Still, for me, it's still not very clear how this insurance works. I understand the indexes, but okay, we're skeptical, right? How much I need to pay? What's the catch? Where the catch is? How much I need to pay to get this done, and what's the really benefit here?
Yeah, so there are several people that I have talked to that have just had bad experiences with the product, and I think that's with anything that you have to rely on payments for, that there's some risk in there. So I've heard from a lot of people that have found success in it that it really pays off if you use it every year. Like, you don't want 1 year to determine if you're going to use it the next year, because 1 year may be better than the other. So I wouldn't necessarily say there's a catch to it, but there's definitely a strategy and consistency that's needed with enrolling in the product. And that's kind of where your insurance agent's going to come in and help you use their tools to determine kind of where you're at on that spectrum. And there are definitely different parts of different states that it may work better in and may not work better in. So again, that's just really where that insurance agent is going to come in and help you decide and make those decisions.
So what is the annual cost for the producer? I know it changes depending on the type of coverage you get, but what is kind of a base for cost, or range for cost?
Oh gosh, that range is it's super wide. So I don't know that I would be able to, off the top of my head, give you a specific number. But I will say with the payments, they're not due up front. So when you enroll, which the deadline is December 1st of every year, but your payments are not due until the following September. So how that works is your indemnity payments, if those pay into your premium payment. So 1 month your payment that you'll have to pay may go up because your coverage level or productivity factor or whatever, you didn't fall within the range to receive a payment. But if you do have a month where you received a payment, that will go towards your premium. And so by the time you get to September, you may not have to pay anything. So that is one upside to the product, is your payments aren't due right then and there. You have almost a year to pay that.
Sure. I've seen a lot of the insurance companies promoting this as a way to make money, and I like how you put it, is a way to reduce your risk rather than thinking about make money. And we need this long-term analysis, long-term view to make sure it's feasible and it's paying back. But they always present, I don't remember the numbers, but some 4 out of 5 years you're going to get money back or something like that. Do you have any information on that, or it really depends on the conditions?
Yeah, it's really going to depend. Again, I know I'm throwing it all on the insurance agents, but they would really have better numbers for things like that. Because like you said, our whole goal with the project was to really approach it as a risk management tool. So a really big part of it was just teaching producers how to assess their risk. Like, if I don't get rainfall, what am I going to have to do in order to either sustain or improve my production? So that was really the biggest part of the workshops, was learning how to assess your risk and how to go about thinking about that. And then once you do that, you can explore PRF as a way to mitigate that.
Very interesting. Yeah. We really need different tools in the toolbox for mitigating risk at the farm level, and many of those are kind of, I like to say, outside of the farm gates. They're not really production tools, but they play a major role. I'm going to change topics here on you, because something that I'm very interested in, you understand why, if you've been with us in the past few weeks talking about the potential for integrated systems and new generation, succession, farm succession. You have a program about farm succession.
So I personally don't have a program for succession planning, but what we did recently a couple weeks ago was have a few professors come in from Maryland. I say come in, but they Zoomed in for a webinar, and we just advertised it that we were going to just talk about some introductory terms about succession planning and why it's important, why it's specifically important in Florida. And we just asked them to kind of talk about some key points, like what even is succession planning. One of the topics was how to get comfortable with the uncomfortable. So a lot of it is just sitting down and having that conversation with your family members about what do we want to do with this land when one of us passes away? Do y'all even want this farm? Should we look at other options and things like that? So it was very, very basic, just to kind of get the wheels turning and to also gather interest from agents to see if they needed more information about this topic, and then kind of gauge what their producers in their counties needed. So it was both a teaching tool, but also kind of a needs assessment for us statewide people to figure out what we need to do for our agents.
Sure. One of the things that I'm interested, well, first of all, I'm also on the succession for farming because I'm the 6th generation farmer in Brazil, and the succession is always something that comes into the discussion, not only the physical part of how we're going to get the work done and everything, but also the legal part.
Yeah.
And that planning is so important. In farms that got divided because of poor succession, basically you end up having to sell most of the land to be able to mitigate some of the costs for that, and that is important planning. I'm always thinking about the younger generation getting back in farming, and we have less and less young people in farming nowadays, and this is where it plays a major role. Especially that's what we talked last week about the integrated systems is an opportunity for the young generation to get engaged back in agriculture.
Absolutely.
I want to explore another topic with you, which is, well, home run for you, right? Cattle market.
Yes.
We always talk about cattle market. There's so many things, and I understand we're surfing upwards in a very good cycle. We've been selling cows here for unprecedented values. Like what, that animal is selling for that much is like crazy. And then you cannot buy cattle today because just the prices have been so. It's been a selling market. It's very, very good. So what's your general big picture overview of the cattle market today and where we're heading to? And then I have a few questions on how to take advantage of that market as a farmer, as a producer.
Yeah, for sure. So when I got hired, my joke at meetings was I came in at the perfect time and I'm the one that brought these high cattle prices, so you can all thank me for it. But as soon as they start dropping, I'm leaving. So that was kind of my joke, but obviously I'm not going to do that. I'm here for the long haul, hopefully, if the Lord willing. So just a general overview of the market. So the inventory report, the annual one that USDA releases, just came out and confirmed that we are smaller than we were last year. All cattle and calves group, which includes both beef and dairy in the nation, dropped about 0.5%. So we currently have, let's see, I have it written down here because I wanted to remember. About 86.7 million head of all cattle and calves. And then the national beef herd is at 27.9 million head, which is also down about 0.5%. So it wasn't really a surprise to anyone that we got smaller because of all the liquidation and things that we've seen over the past couple of years. And that's what's encouraging all of these high prices. We have really tight supplies. There's just not enough cattle to meet the consumer demand. And that's been another thing. We've had record consumer demand for beef products, and not just for any beef product, but for choice and higher quality products. That's really grown by, I think CattleFax numbers were 70 to 80% since 98 have grown for demand. So that's been really cool to see that consumers are willing to pay these record high prices for beef. And it's encouraging for producers, and we just have to hope and keep delivering that high quality product that they want so they'll continue to pay for it. And then just specifically in Florida, so we actually got a little bit bigger. We went from 862,000 beef cows to 865. So we grew about 3,000 head. But the number of replacement heifers that we have in Florida remained unchanged. And so that's been a big number that we as economists have been watching, is the heifer numbers, because that's really going to show when we're going to start rebuilding and expanding. But the picture painted right now is that we really haven't even stabilized. We were still liquidating last year. The number of heifers that we have nationally for beef replacements is 4.7 million head, which is down about 1% since last year. But the big point there is it's the smallest pool of replacement heifers since 1949. So we're super low. We don't have a big pool of heifers to breed, and so it's going to take a lot longer for us to rebuild through heifer retention. But another thing is that cow culling is going to be a big factor in how fast we expand. So it looks like last year in 2024 that culling slowed a little bit, especially in Florida since we increased in cow numbers. But cow culling is definitely going to be a really key factor to watch in terms of expansion.
So the trajectory of the inventory is still downwards. You said it's not stabilized yet. So we're probably still going to see as good as or even higher prices of stocker cattle.
Yeah, so I think you're going to see higher prices across all classes of cattle. I mean, steers, heifers, cull cows. I mean, cull cows are kind of like a secret weapon right now. I mean, they're going for, I think in Florida when I looked yesterday, is like $1.25 and even higher than that. So across the board, I think we're going to see high prices just because the supply is so low with a high demand. So that combination always results in high prices. And as far as stabilizing in 2025, I think we could definitely see some stabilization. It's really just going to depend on what producers decide that they are able to do. Are they able to breed some heifers? Are they able to stop culling and that sort of thing? And we won't really know that. We can watch certain reports throughout the year, but we won't really know those numbers until next January in 2026. So we could definitely stabilize this year. There's not really a whole lot of ideas that we're going to expand. If we do, it'll be very, very, very small. So I think the theme this year is going to be more stabilization.
So the question is here, so those cool cows, we're planning on cool because the cattle prices are so good. I mean, calf prices are very good. Cool cow prices are very good. Keep and breed or get rid of those cool cows?
I think that is producer based. It's going to be different for everybody, but I do think there's opportunity to capitalize on that cull cow market. So we all know the saying, one man's trash is another man's treasure. So just because that cull cow, maybe she came up open or she's not meeting your production expectations for your ranch, it's important and it's worth your time to look into, is it worth it to maybe improve her body condition score, maybe invest a little bit in her to increase that sale price of her, or maybe it's an opportunity to keep her until spring. So let's say you normally cull in the fall, but it would be worth it to cull her in the spring because typically prices for cull cows raise or are higher in the spring and summer months just because a lot of people across the country are culling in the fall. So again, that low supply in the spring and summer months increases those prices. So yeah, there's definitely a lot of opportunity to capitalize in the cull cow market right now.
Fantastic. And for those thinking about selling, normally we're going to see the best prices between now until end of the spring, early summer.
For cull cows?
Yeah.
Yeah. So they typically start, when you look at the price data, start rising up in March and then will kind of stay high until July-ish, somewhere in there. Yeah.
Okay. So it's good timing for taking a heavy hand on that herd and improving. So one of the good things of cooling some of those cows, other than cashing them, is that we can really improve our reproductive efficiency. Big proponent of synchronizing that herd, not necessarily using synchronization per se as a technology, but synchronizing, getting them in a shorter breeding season, get that reproductive efficiency up so we can improve our forage use efficiency and then feeding efficiency as a whole. That's essential. What do you have to say for those folks like me who are interested in getting into the cattle market right now?
Well, it's going to be expensive. You're going to write a pretty big check if you're going to buy some cattle. But one thing to think about is our supply and inventory of cattle is so low. It's the lowest in like 64 years or something in there. So it's going to take us a long time to rebuild to a certain stabilization level. I don't know that we'll get back to the levels we were before we started declining like we saw in 2019. But due to like high input cost, high interest rates, land values increasing, it's going to take a lot longer to start expanding just because it's tougher. It's more expensive to be in the cattle business. It's more expensive to get in the cattle business. But another thing to think about is if high prices last for several years, like we're thinking they will, it may be worth an investment to get some cattle or maybe increase your herd so that you can have a lot of calves to sell in the next year. and then maybe possibly make a return off of that. So, but that's just another thing that you have to kind of pencil out and think through timing wise. Is this something that I can do now, or should I wait until prices come back down to get into it? So,
which might take a little while for
which might
us
take
to,
a while. Yeah.
Okay. This while, how long are we normally talking about when we think about cattle price cycle?
So cycles can vary between like 9 to 14 years. Often we talk about it in 10-year cycles. So 2025 for this cycle, though, will be year 11. So this very well could be the bottom of the cycle. And then in 2026, we can start seeing some growth. So yeah, that range is 9 to 14 years, but typically the average is around 10 years.
So I remember very well when I was actually traveling in Texas back in 2013 when they had a huge drought there, and the cattle prices were like a bred cow was bringing 25 to 3,500, which was unheard at that time. Now it may be not so unheard of, and it seems like the prices are now even higher than those. That time was triggered by a huge, massive drought all across the high plains, and there was a lot of cattle lost there too. What triggered this recent cycle? Is there anything we can attribute to, or is it global dynamics, or what is the cause of this high cattle price cycle now, low inventory and high cattle price?
Yeah, I think it's definitely a lot of it is attributed to the drought that we saw in 2022 and that lingered into 2023. And while that major drought has somewhat subsided, we saw some recovery. We have some drought reoccurring. It's resetting out in the Southwest Plains specifically. And the talk or the expectations are that the drought will persist throughout the year as we transition from La Nina to El Nino. It's really going to depend on when that switch takes place. So I would definitely attribute the low supply and high prices to drought because producers had to get rid of their cows. They couldn't afford to feed them, and they didn't have the grass to feed them. So I would definitely attribute it to that. And of course, there's always global things going on that are going to influence prices, but the key one, I think, we would attribute to the drought. Yeah.
So for those people interested in getting into the cattle business, is there a segment of the production system that would be more advisable, maybe less risky, or a better chance of profit to get into, considering the high costs of everything today?
A certain sector. So just thinking off the top of my head, for me personally, if I wanted to get into the cattle business right now, I would maybe go out and buy some bred heifers or bred cows, or maybe even some bred pairs. So she has a calf by her side and she's bred back, so that you can get a fast return. So if you buy a pair, my great-granddad always used to tell my dad, buy a pair that's bred back because you can sell that calf to help pay for her, and then she's giving you another calf that next year. So that's kind of a quick return kind of method. Yeah, I would definitely, if you're going to buy cattle, have them bred so that you can maximize that return quickly.
I know this is Florida, people don't do this much, but I'm a big fan of stalkers because that's what we do back home. We background a lot of stalkers. How do you feel about the stalker business, especially in light of what we have been talking about in recent weeks with the integration of cattle and livestock?
Yeah, I think
crop and livestock, not cattle and livestock.
Yeah, I think the stalker backgrounding business is fascinating. I think it's really cool. Again, I didn't grow up around, like, immersed in the cattle industry, but I've always thought the idea of the stalker backgrounding phase is fascinating. Me and my dad have talked about the possibility maybe one day getting into that ourselves. I think in this market, stalker cattle are expensive, but fed cattle, so 8 weights, are also bringing high prices and record prices. So I think if you do it right and can maximize your feeding days, and also sell a lot of cattle, so you might want to think about how many cattle you need to sell. Probably need to sell a full load or get with somebody to make a full load. I definitely think there's opportunity there, but it's definitely one of those things you got to think through. It's not just kind of a on the whim process. I think it's worth doing, though. I think there's some opportunity there.
Very interesting. And now we're getting into probably a new phase in terms of global trades with the new government here. How do you see that affecting? Because we have a low inventory, we have high demand, we are bringing a lot of beef from other countries, and then we're going to face likely increasing tariffs all across the board. So how is that going to affect the internal market and cattle prices here?
Yeah, so the tariffs are definitely a hot topic right now. The truth is, though, we really don't know exactly how it's going to affect specifically cattle and beef prices, just because especially now they've been placed on a 30-day hold as they start negotiating. So specifically for cattle and beef prices, you're right, we do import some beef from Canada and Mexico and other countries, but it's less than 50% from each country. So while it will impact if the tariffs do go into place, it will impact prices. It would be silly of me to assume how bad they're going to affect them because we just don't know right now. But I think a major focus for the tariff talk is production inputs. How are the tariffs going to affect inputs? So for example, the U.S. imports between 80 to 90% of their potash from Canada. So fertilizer is a hot topic right now of if those tariffs are implemented. Fertilizer is going to be one of those major inputs that may take a hit, like mixed fertilizer, if you have a need for potash. So that's just kind of one example. But again, as far as cattle and beef prices, it's kind of hard to say right now.
Yeah, we had on the news today, we had new taxes in steel and aluminum, which is going to increase probably a lot of the machinery costs also. I had a call with a farmer recently who was very worried about the hay business because a lot of his equipment is imported either from Canada or from Mexico. So what is going to happen? Things that are, again, outside of our control and outside of the farm, but really affect the bottom line.
Yeah.
Fantastic. We can wrap up here. Well, Hannah, I really appreciate you joining us on Cow Talks today. I'm pretty sure we're going to be seeing you more frequently and listening to you more frequently from now on. I'm excited to get to work with you in this and many other projects. So I hope you can be a frequent guest of this show. I appreciate you coming.
Yes, thank you, Marcelo. I look forward to being on more episodes as well.
Sounds good. For more information on the projects that Hannah is conducting, where can we find more information?
For the PRF insurance, that is actually through UGA, so it'll be on their website. But for any resources from my specific program, you can look on the Range Cattle Research and Education Center's website, and under directory, you'll find my name and then my webpage with a lot of resources on there. But you can always email me or call me, and I can give you information about it, all of those things we talked about today, and direct you in the right place.
That is perfect. And if you cannot find that information, please reach out to us in our email, forages@ifas.ufl.edu. That is forages@ifas.ufl.edu. And contact your local extension agent. If you are in Florida, IFAS extension, but also in any other state here in the United States, you're going to find cooperative extension to help you and be at your service. Thanks again, Hannah, and I hope to see you soon.
Thank you.
Thank you for joining us on this Cow Talks podcast. We hope you have enjoyed this conversation.
If you have any questions, ideas, follow-ups, or comments, please reach out to us through our email, forages@ifas.ufl.edu. That is forages@ifas.ufl.edu. Or find us on our social media, uf.forages on Instagram, UF Forage Team on Facebook, or UF IFAS Forages on YouTube.